starting to think maybe just grab the cloud basket of GCP, Azure, and AWS and hold them for the next 10 years, and you're going to be just fine, because those look like the most resilient businesses of all time.
Yeah, I may agree there. And Microsoft, to be honest, haven't looked at kind of the valuation closely. So I'm sure it's down because the stock's down, but I tend to agree with you there. Let's look specifically Amazon. I kind of tweeted that earlier today just because I was writing a Motley Fool article for them, and I was like, oh, wow, the numbers looked a little bit better than I thought. So let's see, I compiled some numbers here. So over the last 12 months, just to give some context, their traditional online selling business, so just online stores, this is not their physical stores, did $221 billion in revenue. Now, this is going to be the one with extremely low margins, probably kind of closer to the Costco or Walmart model, even of, I don't know, maybe 5% margins at scale. So not really too meaningful. But if we look at the three big profit drivers, or what, excluding AWS, I guess we'll leave that to the end. The three big profit drivers, we have 30 third-party seller services, subscription services, and advertising services. Last quarter, third-party seller services grew 23% year over year, and that's just third-party sales, the revenue they get off of third-party sales on their platform. That grew 23%, and over the last 12 months, that business has done $112 billion in revenue. Now, if we look at subscription services, which is stuff like Prime, mainly Prime, that grew 14% and is on a annualized run rate of $35.6 billion. And then if you look at advertising, was very impressed to see that grow 30% year over year and hit $36 billion over the last 12 months. So I think you combine those together, it's really tough because their consolidated profit margins are fairly close to zero. But I think those businesses combined, you look at the high margins you can get on advertising. You look at kind of the scale economies, they should be able to get on this fixed cost basis on their, logistics, infrastructure, whatever, on the third party sellers as that continues to grow. I wouldn't be surprised if the e-commerce business could do 30 billion dollars in annual operating income, or maybe closer to 40 billion. And then you have AWS, which did over $5 billion in operating income last quarter. I think people are disappointed because it grew a little bit slower. It grew 28%. The cloud segment grew 28%, which is slower on a percentage basis than GCP or Azure, but they're the largest one already. So I think on a dollar basis, it's probably not that bad. So at a market cap of $900 billion, I don't think any of that's too crazy. And I think you can get a sum of the parts, which is dangerous. You don't want to just do some of the parts, but I think there's no, you don't have to get crazy to say, okay, this business can be doing $50 billion in operating income soon if they're able to rationalize some of their spending, which people don't focus on. But Amazon is they don't advertise it that much, but they basically have like kind of a Meta Reality Labs style stuff going on. They just don't talk about it and rename their company too.
They just didn't they didn't build their entire company personality about it.
They didn't rename their company Alexa. Yeah.
Okay, so looking at intelligent cloud on Microsoft, which that's how they report the segment. It says our intelligent cloud consists of our public, private, and hybrid server products and cloud services that can power modern businesses and developers. It's a little more than Azure, but trailing 12-month revenue is about 78.6 billion from intelligent cloud. Trailing 12-month operating income is 34 billion, and operating margins have expanded consistently. And it's just literally been, all right, so I said 78 billion trailing 12-month. In Q4 of 2017, the number was at 27 billion. It's just been rapid growth. How much would you pay for, hold on. I know you're grimacing. How much would you pay for this business, Azure or Intelligent Cloud, at $80 billion revenue run rate with 45% operating margins and growing. I think it was 26% constant currency.
Yeah. And you said run rate, but that's trailing 12 month, right?
Yeah, but the 80, I think it crossed 20 billion in the most recent quarter, so it's still about 80 billion.
Okay. I saw someone throw out $100 billion, but that could be a different way of doing the business. So what was it? $34 billion?
In operating income.
I think
Would
it's
you pay 25 times?
I think a solid oh yeah, for sure. For sure. Given the growth rate. I think a solid like 34 billion. I feel like that's worth about $1 trillion.
If that's the
What
case, their enterprise value is 1.6 today. And so if you're saying Azure or their intelligent cloud is worth $1 trillion, and you think AWS is potentially worth more than Amazon's, well,
yeah, that says more about
depending on if they hemorrhage money in the rest of their businesses, Amazon is worth it's pretty valuable right now, I guess.
yeah, and AWS if it's worth similar amount now is I think that feels like a fair value for Microsoft's intelligent cloud business, but I don't know if I'd buy it at a $1 trillion market cap, if you know what I mean, because you want that discount. I mean that is still a premium multiple, but then if you look at Microsoft, you get 600 billion for the rest of the business, Office, Xbox,
Which
LinkedIn.
is bigger. It's bigger. It's doing more in terms of operating cash flow over the last 12 months than the intelligent cloud side.
Yeah, although that's it's not. I don't think it's pretty clear that intelligent cloud is the majority of the value here going forward. But I mean, those other parts of the business aren't tiny. Man, yeah, some of these big tech, yeah, the cloud. I love the cloud focus because I get nervous about Well, Netflix isn't big tech anymore. I get nervous, or I guess it never really was, but it gets tossed in there for some reason. Always get nervous about Netflix just because of the competition and the classic bear cases I get worried about. I get worried about Meta because they don't have. I think their moats are more flimsy and the investments seem a bit crazy. And then I worry about Apple irrationally. Apparently, I'm the one person that doesn't get this business just because I think the consumer brand moat is just a bit tougher for me to get around a lot of the times, even though they have the strongest consumer brand in the world, probably ever. There might be a few you could argue has better, but clearly top five. If you focus on the cloud ones, there could be those could be the three that look at least the most interesting to me. To be fair, as of this recording, we own shares of Alphabet, or slash Google, but yeah, the cloud businesses look extremely interesting to me. And I say that though, both of us say this as very big generalists in the cloud market, which
My only real understanding of cloud comes from that one acquired episode where they talked about AWS. And I'm like, oh my God, you walk away thinking this is just an incredible business. It's hard not to. But if you're looking at each of those businesses independently and you're buying the whole thing, you get them. Like if you're buying Amazon, you're getting the most exposure to cloud, as opposed to if you buy Google at the whole enterprise value, you're not getting that much of GCP. You're really more paying for search, and Microsoft, you're still paying a lot for the personal computing and the productivity and business processes and stuff like that. So, yeah, I don't know. I guess some of the parts for Amazon is just AWS equals enterprise value.
Yes, and it's not surprising to see the huge discount and the potential for Amazon if you kind of go through any sort of scenarios, and that's just right now. It's not surprising that the investors they want companies, or they're paying more of a premium for companies that have consistent earnings. Google slash Alphabet and Microsoft both consistently generate cash, and I think investors just want that at the moment. Amazon is just less, right? It's just they don't have that, and you can see why they have the discount because of that.